Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstocks.com, drstoxx.com. We've been in business every market day since October of 2002, publishing our flagship award-winning trend trade letter newsletter, along with the ETF letter, the momentum letter, a couple of small cap letters, and two live trading rooms. And I'm coming to you today from the live options room. And if you want to join me in a group of amazing people at all levels of option experience. And it's a very good place, I think, to learn how to trade options because I do a little bit of teaching. I jump on the live mic like now and teach once or twice a week. You can go to the subscribe menu, scroll down to the live options room, click on that to subscribe. And when you do that, you'll be offered a 40% discount to our flagship live room, which is the live trading room. Live options room only do long calls and puts, and the live trading room we only do shares and of stocks and ETFs, and every now and then we trade the micro e-minis. All right, I want to show you some charts today. So we're in this interesting phase of the market. Not that there ever is an uninteresting phase of the market. One of the things that I love about being involved in the stock market, and now involved to the point where if I don't do very well, I can't pay the bills because I trade full time, is how it forces you to keep track of economics, of course, economic data, politics, geopolitical stressors, the general sentiment and psychology, mathematical relationships, trend cycles in the market, in the economy, and then all the technical analysis that goes into the charts. It's just a fascinating study. And it's for a brain like mine that likes to buzz at a fast speed and take in a whole bunch of different inputs, it's fascinating. All right, so where are we at in the market? So this is Thursday, the 22nd of January, and we're kind of fighting off here a series of weeks, even 2 or 3 months, I would have to say, where we just were in a very flat, mostly range-bound market. And that is pretty much the range that we have been in. A couple of exceptions, right? We slapped down on some tariff news and then we rallied back up because that was well overdone. And now I think we're going to get another slap down over the next 2 weeks. I don't think it's going to be a major dip. I don't think it's going to be too prolonged. But I think by the time we get into the middle part of February, we should be seeing some much better buying opportunities than we are right now. We had a taste of that, a foretaste of that 3 days ago on Tuesday, the first day of the week for trading this week, because Monday was a holiday, and it was a big slam down from the open, right? Gap down, and it just kept falling, and it was kind of scary, and the volume was huge, and everybody was in modest panic mode. Now, nobody was really, calling it the top of the bull market, and now we're into a bear market. Nobody was out there making outrageous calls, but it does seem to me that started what is likely now a transition from a robust bullish market. Then we had this long trading range, 3 or 4 months, and now we're transitioning again to something a little more, let's call it a little more volatile, right? So we have this little backside bounce. We're still underneath. We're underneath all-time highs. We're underneath the supporting trend line. And I think that's probably about it for the next day or two. Tomorrow, as we start to slide over, and then I think next week we get something a little more bearish, let's just say. Now, the good news is, and it's always good news in any bear market and in any market pullback, there are sectors of the market that are doing really, really well. They're just skyrocketing up to all-time highs. And we are in some of those sectors. And I really don't see that those sectors are going to be slowing down all that much going forward. So while blue chip tech stocks are going to have to price in AI bubble-ish kind of stuff ahead of earnings, because those guys are all reporting earnings starting next week, the big blue chip tech stocks. And, Trump is backscaled on tariffs again. I don't think tariffs are ever going to be a problem going forward, but we still have, China stopping chip sales. We've got Ukraine-Russia skirmish. We've got Greenland and the EU. So there's tension out there, and the market hasn't really priced all that in. So I'm just calling for a little bit of a dip, maybe somewhere below 6,800, north of 6,700 over the next couple of weeks. We get out to mid to late February, and I think we'll be in a better place. Now, I hope I'm wrong. I hope we don't do any of that. We just bounce right back up again and keep going higher, but that's usually not how it works. So we'll see how it goes. Always, we trade one day at a time anyway, and we let the market tell us what it wants to do, right? We don't tell the market what to do. We let the market tell us what it is doing right now, right today. Okay, NASDAQ is pretty much the same story. Here is that supporting trend line. It broke on Tuesday. Big, strong bounce back as opposed to the S&P, which is kind of weak, but a big, strong bounce back on heavy volume the next day. Tagged the underside of the trend line again and pulled back into the overnight hours and then right back up again. And that's exactly where we're at today. And I think it's probably about it for the QQQ, MNQ, TQQQ calls that, and the blue chip mag stocks that are at the top of that index probably have a little bit of coming back in, shall we say? And it's pretty much the same map that I have for the S&P. A couple of weeks going into the middle part of February, taking us through the bulk of the big blue chip tech stock earnings, which I don't think are going to be bullish for the market. Just like last quarter, we're going to hear CapEx spending is through the roof, and we don't have a good, clear understanding of what our margins are going to be. We're not quite sure how profitable all of this investment is going to pan out, but we're doing it anyway, and we're increasing it all the same. So I think the market needs to be a little bit cautious heading into those earnings. And I think we're not going to get a rate cut at the end of January, so that's not going to save us. And I think we're probably not going to get a rate cut until we get rid of Powell in the chair position. So the Fed is not giving us the tailwind that the market wants, and we've got these headwinds, as I just mentioned, that the market I don't think has fully priced in yet. But anyway, we'll let the market do what it wants, but that's just it. I'm not long or short the NASDAQ. We do have some protective puts on in the S&P, but it's it's not really, it's more of a hedge position than a directional position. And at the same time, we're finding some nice niche positions. We're in some silver miners. We're in silver in the other room. We don't have any gold right yet. I want to look at gold and silver here for now. Okay, so here's my thought on Bitcoin. We are very close. We're not there yet, but maybe another week. We are very close to a buying opportunity for Bitcoin. I've been bearish since early November. This is well known because I just keep posting about it over on the main boards. And I thought we were going to hit 75. We came down to 80 on that day right there. It has been in bounce mode ever since. It's been weak, however. Weak bounce, weak bounce, weak bounce. You get some weak upside, you get some slams down to the lows, you get some weak bouncing. Now, it started to do some bullish things here. It printed a higher low, it printed a higher high, and it broke out of all those range highs. And it was good volume. And I wrote, hey, I think, maybe Bitcoin, the bottom is in. Well, it wasn't. It went down even harder on Tuesday with all the stocks falling than the stock market did. It had a weak reversal yesterday, and it's even weaker still today. So I'm not calling a bottom just yet. It's not a buy just yet, but I think we're close to being able to cover the shorts, and we're close to being able to at least nibble on some longs, but we're not there yet. Not seeing it in the chart. Same is true for Ether pretty much. And I'm not even really sure. I'm going to say this, but I'm not really sure Ether has the kind of future that Bitcoin does. I think there's been a lot of confidence coming out of sentiment, positive sentiment coming out of the crypto bubble, and the selling by institutions and by banks and all kinds of things. It's just not some good signs there. But of course, all that will come to an end. Then we get the bottom, and then we get one of the best buying opportunities for Bitcoin, at least, that we'll see this year. Okay, gold is almost up to 5,000, and it just had a really nice run this week. So while people are a little skittish about stocks, they're jumping back into gold after a slam down pullback and then a little bit of a 3 or 4 day consolidation and then another 4 day consolidation. So I want to get back into gold, but I've been waiting. I still have a little bit of shiny. Let me show you my hat. So I've been wearing this hat today because uh, the SHNY is 3x bullish fund for gold, the price of gold. DULL is a 3x bearish fund. We're not in that one. Don't want to be in that one. Don't anybody be in that one. But I'm still waiting now to add to my position and get us in officially back into gold for one of these, either a pullback or a sideways consolidation. And we're just not getting it. It just keeps going up. Now we are long silver. We're long silver AGQ, the 3x or 2x bullish fund for silver, the price of silver in the live trading room. And we're long silver miners, the junior miners, SILJ, which got all kinds of call flow today. I mean, everybody's jumping back in to the silver miners. We're long those, and those are doing great. Now, silver, silver has been, a little bit more volatile than gold, right? So even yesterday we saw gold go up and silver come down. We had a couple of days of some weakness in silver, and then a pop right back up again to all-time highs. And we had this is where we got long silver again after a couple of very nice trades in AGQ. That consolidation right there, just perfect. And I would like to see that again before we get back into something like SLV calls. I'll even take a little 3-bar sideways consolidation like right here, a 4 or 5-bar consolidation like this. But I really think silver will have little dips like it has been, right? We saw this week. We saw it last week. It'll have its 1 or 2 day dips, and you can buy those little dips if you want to. But I'm just looking for something a little bit more, something that will take some of the risk out of the trade. But frankly, I don't think silver is going to have any kind of a major pullback or even a quiet period into the summer months. I just don't see it. All the functions that force price higher are still in place and they're not going away. Gold's a little bit different, right? Because you do have central banks that hoard gold as a hedge against the currency valuation. You don't have that with silver, but silver has these industrial uses, AI data center uses, electronic vehicle uses, and that demand is just going like crazy. All right, so silver and production is coming down in mines because of environmental regulations. So it's just a perfect storm for silver to keep going up. Where is copper? Copper is that's natural gas. This is copper. All right, so copper's had, this is the price of copper. We are long. We're long one of the copper miners, FCX. It had a little bit of a blip today because it reported earnings after the bell, actually, the first bell. And it was a great report, but they did say something that wasn't much of a surprise and shouldn't be much of a surprise to the market, and that is that their forward-looking production is not as strong as they thought it would be, or not as strong as the market was expecting. So that did cause about a 2 to 3% pullback. But copper itself has been pulling back very nicely, and I'm not quite sure. I know there is an ETF fund that tracks the price of copper. We usually use the COPX, which is the copper mining fund. And I sometimes will trade this one. This is MHG, which is the micro E-mini copper futures contract. So all of those are good. And I love this pullback. So I really think that if you were wanting to add some metals, metal exposure, I can recommend right now copper miners, COPX, and copper futures. Okay. Now, the other one I want to look at is platinum, which PPLT is the non-leveraged version, and we got back into platinum in the options room, right? Because of this beautiful, perfectly formed consolidation pattern in a strong uptrending market with all kinds of bullish volume going in. And here's the thing about platinum. So copper is the poor man's silver, platinum is the rich man's silver. And when they make these new chips that have to go super fast with all the electricity going through them, they need a special metal that can withstand that pressure. And silver is good, but it's not as good as platinum. Platinum is more expensive, but frankly, silver is probably catching up. And so platinum becomes really the metal for these high end, high capacity, super fast quantum chips that are needed in today's new technology. So platinum's in strong demand, and then it has all the same production problems that silver and copper both have. So copper, silver, platinum. You can throw in palladium. I don't really know much about palladium, but there is a fund. It's SPPP. I have some of this myself, which is both platinum and palladium, non-leveraged, put together into the same fund. So this looks great. Looks the same chart. And if you wanted to add a little leverage, you can do a PLTM. This is one I'm in myself. We've been in it in the other room. And again, same consolidation pattern. All right, so the metals are hot, hot, hot. It is the sector that everybody's interested in. All the inflows are there. The excitement is there. The trend is there. The breakout moves are there. The volume is there. So we're not going to go away from those sectors anytime soon. Gold and gold miners, as I said, I think they do need to come in a little bit, but and silver probably will come in on a day-to-day basis, but not so much of I don't think we're going to get any kind of a major pullback in silver for a long time. Now, one last thing I wanted to show you before I look at some other charts, and that is I want to go to. I haven't done this yet, and I'm curious to see what this looks like. So, there's a guy in my pro trading group who he's kind of specializes in ratio charts. So he's always looking at like the small caps to the large caps, or the I don't know, gosh, what else? Like what was the one he had an interest in? And what his thing is that when he looks at these ratio charts and they get to certain levels of extreme divergence, then he's got a trade there that you can, you buy the undervalued one and you sell short the hypervalued one. And I don't know if you'd want to sell short, but he was talking yesterday about the gold to the miners ratio. Yeah, this is what he was talking about. Way down. Now, let's go to a little longer chart, maybe the weekly. Let's go to something like 3 years. Okay, there's the weekly. Yeah, let's go to 5 years or 10 years. Yeah, look. Okay, so it's bouncing back this week, but on the weekly chart of the ratio between the miners, between gold and the miners, we've got a very low value that hasn't been seen in years, right? So gold to miners. Let me think. I have to think about whether this is bullish or bearish for miners. So if gold is really high and miners are really low, you're going to get a big number, which pushes the chart higher. And if gold is low and miners are high, you're going to get a small number, which pushes the chart down. So what this chart is telling us is that gold is either super undervalued relative to the miners, or the miners are very overvalued relative to the price of gold. I think it's probably the latter. But that kind of chart kind of gave me pause, and it did keep me away from adding to gold yesterday. I was tempted, but I did not. And I haven't even really looked at the miners. Okay. I just wanted to show that to you. And some of you maybe have better experience with me than me in those ratio charts, but and I'll see if I can find that guy, his name. I think he has a Twitter account or X account. All right, one last thing I wanted to show you. I don't have a whole lot of time, but let me show you a couple of things here. First of all, let's go to my greens list. And I've got way too many in here. Yeah, see, I keep updating my greens list at the downstairs office on the laptop, and then I forget to save it down there. And when I get up here to the big office space, uh, I don't have it updated. All right, so there's plenty of stuff on here that shouldn't be on here, and I'm not even going to look at that. So let's look at the Reds list. So there are a few that are setting up for some potential shorts. All right, now for shorts, I do not have a firm, hard and fast method for shorting charts. Some people like to look at relative strength. Some people like to look at running into resistance. Some people like to look at Fibonacci retraces in a downtrend. Some people only short downtrends. Some people only short momentum stocks going up to the moon, and everything in between. So I try to keep it pretty simple. I want to look for a supporting trend line that breaks. I like to look for bearish divergence, and I like to look for some good volume on that break, on the break of the support. So I think we have pretty much all of that with HUT, although the volume yesterday was the break, then it rallied back up above the line at the close, and now we're back down below the line, but we're still at the bottom of that near-term range, and the volume today is really light. In fact, it's light all over the place. But that is the short setup that I'm looking for. We've got a bearish MACD sell signal. The stochastics, the smooth stochastics, are in sell mode already. The big black long-term cycle is already in rollover mode, and it's falling, and yet it usually precipitates a sequence of downtrending moves, the black line here. When you get down to the bottom, as it did in this area, the big black cycle, that's typically where you start to get new uptrends forming. But when it tops out, as it kind of did here, and then it was already falling when it got up here. And you have to factor in these shorter term. The green is the intermediate, the blue is the fastest line, and the yellow is somewhere in between the green and the blue. And when all of those are running in sync, that's typically where you get a really strong downward move. And I think it's starting. I think today HUD is starting. iNode is not quite there yet. It actually looks a little bullish today with a sort of a bull flag forming above the 50. But this isn't a downtrend. Here's your supporting line. We haven't broken it yet. It's not a short yet, but I'm just watching this one. NBIS is not a short yet. Same principle as iNode. Slight downtrend, but again, there are some bullish things going on here. Affirm, I would like to short Affirm because it's a stock that I think the fundamentals require more shorting than buying, but there's no short setup just yet. So we're kind of waiting on that one. You do have the cycles rolling over. All of them are falling here. Stochastics is way down there, and fairly fresh MACD sell signal. And you did have some selling pressure off the highs there, the recent highs. But for my money, I would prefer to short underneath that black line, not on top of it. We are in CoreWeave in some puts, and this was a play right off the 200-period moving average with a lot of bearish divergence. That's another way you can play the short side. You shouldn't go too long. If you do that, you can add when it gets below the line. I kind of think it's going to do that. And we've had some heavy selling pressure recently. Fresh stochastic sell signal. The MACD is not there yet, but it's pinching. And the cycles are kind of mixed, right? The short-term ones are rolling over from the top. The long-term one is down at the bottom. We'll see how that plays out. And then Wolf is another one. This one is almost there. This is near the all-time lows. It's an IPO, and it's got a weak bounce up here into the supporting trend line, but it hasn't broken it yet. So we have to wait on that one. You've got a MACD pinch underneath the zero line. You've got fresh stochastic sell signal, and the cycles again are kind of mixed. All right. Let me see. Oh, I want to do one last thing. So one of the things I do in my watch list is that I usually do a lot of sector analysis, right? I want to see which sectors are hot, which sectors are not, which sectors are getting lots of big inflows. And I look at call and put options on those. And then when I get a sector like, for example, the KRE, which is the regional banks, I'm in the regional banks myself. DPST is the 3X ETF version for that. That's with a trade in my ETF trend letter, not either room. And we got into that just before the breakout, and then it had a really nice up move. And you could see that that breakout was forming. And regional banks have been kind of a safety play against the big banks, which have some headwinds that they're dealing with, right? Their earnings were pretty good, but they did miss on some forward estimates, and they're all now talking about credit card interest, and those are some problems. So the regional banks are getting some good sentiment and some good inflows, and big funds are buying. So I can trade KRE, I can trade KRE calls, I can trade DPST shares, or I can drill down into the sector and find a name in that KRE fund. I usually just look at the top 10, the 10 biggest holdings in the fund, and maybe there's a name there that is setting up quite nicely, even better than the fund itself. So how do I manage that? Well, I keep lists in my watch list in TradingView. I've got KRE, GDX, the gold miner, SIL, the silver miner, REMX, the rare earth metals, XLF banks, KRE regionals, XLK tech, XLRE real estate, quantum computing, staples, consumer discretionary, healthcare, housing, semiconductors, momentum plays, utilities, industrials, basic materials, energy, communications, and transports. So let's go to this list here with the KRE in it. So I've got KRE. I looked up online, top 10 holdings for KRE, as long as they're American trade stocks, because we can't trade off the US exchanges, and I throw those into this watch list. So, it's a pretty easy thing just to kind of go down the list and see which ones have nice setups. They all have nice setups, in fact, because the whole group, this one is actually quite nice because it's right up against, maybe fresh breakout today, but right up against a very strong resistance line. And it's been printing higher lows all along. Yesterday, big green stick on good volume. I wouldn't buy it ahead of earnings, but this one looks good as a trade after earnings. TFC, kind of a similar thing. Breakout, 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 right? Here's one that has a nice little pullback. That's my favorite setup, is the pullback off a good, strong uptrend. Pull back into some area of support, in this case, the 50-period moving average. You have some bullish divergence, which showed up yesterday, and you've got a little bit of a hesitant breakout going on today. And look at that volume. Boom, boom, boom. Now, it looks like earnings are tonight. Wouldn't buy it, but I do like that setup. In fact, I like it so much, I'm going to put it on my greens list, which I need to update. All right, just wanted to show you that as a technique. So if you like a sector, drill down into the top 10 holdings of that sector, take a look at the charts. And if you can't find anything that you like there, but you like the sector, then sure, buy the fund, either the non-leveraged or the leveraged. All right, guys, I'm going to let you go. Again, if you have a ticker symbol for me to analyze, type the ticker symbol, type my handle, Dr. Stoxx, and I'll take a look at it. God bless everybody. I'll produce this little video, stick a link in the room, and then we'll get back to trading last hour or so, hour and a half. God bless. Bye for now.